All right, so we had a big down week in the market over this past week. A lot of people are worried, and personally, I don't think it's a big deal. Again, this needs to be stressed over and over again. If all you're worried about is short-term price fluctuations, you're either gambling or you shouldn't be in the market, right? Because the way you want to invest is for the long run, right? And if you're investing for the long run, you don't care about short-term price movements, right? I mean, if you're a professional, you don't even care about that, right? In fact, basically everybody would probably be better off if they didn't actually even know the price of a stock or of an ETF or whatever, right? The things that matter is, do you own good businesses? And are you buying them at a good price? That is all that matters. And by a good price, I mean based on their valuation, right? Are they cheap? Are they expensive? Are they fairly priced, right? That is what you're concerned about, right? So there's two keys to investing. Number one is buying good businesses, which again, definitely takes intelligence, effort, knowledge, research to figure out what a good company is. But on top of that, you want to buy it at a good price because there's a lot of companies out there that are very good, but they're priced very expensively, right? Or very handsomely, right? So, and this is something that the Tesla investors have found out the hard way, right? That again, I wouldn't say it's a very good company, but it's a good company, but it's too expensive, right? In my opinion, it's not even worth $100 at the moment, right? So that's a very important thing to understand, right? So and a lot of people are panicking even though the market isn't even down 5%, right? The S&P was down about 4.5%. The Nasdaq wasn't even down 4%, which is kind of surprising. Usually it's more volatile. Bitcoin was down 6%, right? So people are panicking over this not that big of a move, right? And the other big, well, actually there's two reasons why this happened, right? Number one, the Fed came out on Wednesday and talked very hawkishly. Thursday, Powell walked it back a little bit. So the other reason is this Silicon Valley Bank collapse, right? Look at this chart here again. It started the week at 284, 285. It's down to 106, and they halted trading, right? So can't even go any lower. So it's down 62% on the week. This is the other reason people are worried that there's going to be another financial crisis. Again, the entire financial system in a lot of ways is designed to prevent against this. Now, again, does that mean that it's impossible? No. But in my opinion, the people that talk about doomsday and we're going to get these massive crashes, number one, they're always talking about it. You have your Michael Burrys of the world that again, people think they're these big geniuses when in reality they've gotten the majority of the stuff wrong. Now he looks like a genius for calling the housing market, but he's also been bearish for the last 10 or 15 years when we've had one of the greatest bull markets in history, right? So you got to also keep this stuff in perspective, right? These people that are constantly calling for collapse, how long have they been doing it for? And have they been right? Um, if you look back, over the long run, the markets have always gone up. And again, people say, well, what if they don't? Well, if the S&P is lower in 20 years or even in 10 years than it is right now, chances are we're going to be worried about other things, right? Again, this is something that another thing that needs to be understood, right? It's like if we get some actual true, you know, Great Depression, modern day Great Depression, you're probably going to be worried more about other things than you are how your portfolio is doing, right? So that's the other thing that needs to be kept in mind here. Again, what's going to happen going forward, nobody knows. Honestly, if you ask me, I think we're going to see some more downsides still. I've been saying this for a long time. I'm thinking we probably test the lows that were made in, October and in June. I think it was right around 3,500 on the S&P. We're at 3861. So we could easily go down another 10, maybe 15, even 20%, right? But eventually the Fed is going to have to pivot. And when that happens, we're going to see another uptrend, right? And here's the thing, for all we know, they pivot sooner rather than later, and maybe we are close to the lows, right? I don't know, right? I don't know. But the one thing that, like, nobody does know, right? Nobody does know. But the key is, if the market is going down, that means that you're going to have an opportunity to pick up good businesses at a discount, right? Because I think that there were a lot of companies that were still priced at a discount when the S&P was at 4,000 or 4,100, 4,200 even, right? So if we can get it 3,800, 3,500, there's going to be companies that are screaming good deals, right? So that's something you got to keep an eye on, right? That's something you really got to keep an eye on. And the key at the end of the day is simply just dollar cost average into good businesses, right? My opinion, again, everything here, my opinion, you need 20, 30, maybe 40 companies, and maybe you add in a handful of ETFs or even an ETF or two just to keep things a little bit more balanced, right? It's an easy way to gain exposure to a sector or a subsector that you're underexposed to, or maybe you don't know of a really good company in that sector and you just want to get more broad exposure. That's okay as well. And that's the other problem too with just buying the S&P, or sorry, buying the SPY or buying the QQQs, is that you're overexposed to some areas that are overpriced, and you're underexposed to some areas that are underpriced, in my opinion, right? I've talked about this before. I think the SPY is overpriced. The sectors that it's the most heavily weighted in are not sectors you want to be overweighted in, and the sectors that it's the most underweight in are probably ones that you want to be overweight. Being over the next 10 years, still very bullish on energy. If we get a recession, again, notice that oil held up all right here. It's still holding up okay. It's hasn't broke 70 for it's been over a year now, right? I think whenever oil goes into the low 70s, that's a really good time to buy, in my opinion. If you haven't bought already, Bitcoin, again, like I said, Bitcoin was down 6%. Again, Bitcoin is one of those things you just dollar cost average. I do not care about the price. Honestly, I would prefer that I didn't even see the price, because it's one of those things where I just dollar cost average. That's the best way of doing it. Same thing goes for the market. Like I said, again, Warren Buffett is famous for saying that if people were forced to only buy 20 or 30 companies over their lifetime, they would be a lot better off. And this is something that I very much agree with, right? The problem too is that people are too willy-nilly on the companies they buy, right? You have to be more, you have to do more due diligence, right? You have to do more due diligence. So again, to get back into what's going to happen going forward, the Fed is going to raise again the next meeting around. I believe it's not till April, right? Don't quote me on that. They're thinking of doing 50 basis points. That's why the market reacted so badly, right? Because what was priced in was most likely a pause, or maybe 25 basis points worst case scenario. Now they're down to 50, right? The chances are it's looking like they're going to do 50. And that's why the market reacted, also because of this banking issue, right? But again, most of these major banks have added to their loan loss reserves, right? They are already flush with cash, right? This one appears to be an exception. So the chances of there being a '08 comparison, it's very unlikely. And this is a mistake that a lot of rookies make, is that they just assume that the next big crash or the next crash is going to be the same as the last one, right? Which, again, not how it works, right? Go back to the last handful of crashes. Have they been the exact same, or even very similar to the prior one, or even ones? Like, no, that's not how it works. There can be similarities, but it's very rare that there's successive ones that are the same. So that's another thing people really need to keep in mind. So again, to summarize it all, don't panic. There's no need to panic. If you can't deal with a little bit of volatility, it's not for you, right? It's not for you. And the other thing too is that, what is the key? What is the goal? The goal is to buy good companies at a good price. That is the only goal. That is the only thing you should be worried about. Again, when I look at companies, and when not that I'm an expert, but when experts look at companies, All they're worried about is this a good company and am I getting it for a good price? Do you think that Warren Buffett cares that, oh, the market was down 5% last week, I shouldn't buy? No. Or even up 5%, right? You should not care about that. Again, all you're worried about, is it a good company? Is it at a good price? And again, just to get into briefly what a good company again is, are they growing cash flows? Are they trading at a good valuation? Are they buying back shares? If they're paying a dividend, are they increasing that dividend consistently? Does it have a stable payout ratio? Do they have a strong return on equity? Are they not issuing shares? Preferably, are they buying back shares, right? The list goes on, right? Those are the most important things, right? Um, but those are the main things you're looking for, right? Are they in an industry that has tailwinds? Are they in an industry that has headwinds, right? That's something that a lot of um, tech companies and some of these more frothier growth type names are running into, right? So it's not that complicated, right? At the end of the day, it's just a matter of due diligence and the ability to defer gratification, in my opinion. So, anyway, that's what I wanted to talk about as far as this past week goes. If you liked the video, hit that like and subscribe, and stay tuned for more.